Hello, Atas community. Today, we are going to start with the stream on YouTube Atas channel. We are pleased to welcome our special guest, Anastasia Demishkevich, who will be hosting today's webinar. She will guide you through the exciting topic focused on tick-perfect entries when using volume profile and cluster chart under Atas. You can follow Anastasia's trading ideas on her Telegram channel or join her trading course. We will provide links in the description. Also, we would like to remind you that you can practice all new strategies on the Atas platform for free. Download the platform using the link provided in the description as well if you haven't installed it yet. So, without any ado, let's get started.
Welcome everyone. Welcome Atas community. I'm excited to be here. Hope everyone can hear me well. And we're going to have an exciting stream today. It's my second time hosting the webinar for Atas. And it was such an amazing feedback last time. It's such a pleasure for me to be here back with all of you. Now, on today's webinar, we're going to dive deeper into volume profile and footprint charts than we've done it on the previous time as well. And the topic of today's webinar is going to be the combination of volume profile and footprint charts for the perfect tick-to-tick entries. We're going to talk about the extra confirmation that you can look for in both of these ways, both of the macro perspective volume profile and micro perspective closer look into footprint charts for the better entries. And we're going to talk about their 3 different setups that you can apply on any market, on any asset, whether it's indices futures, currency futures, commodities, oil, gold, silver, platinum, palladium, wherever everyone trades. And all of those setups can be applicable on any of those assets. So without further ado, let's dive into the volume profile and the footprint. Now, first of all, right, you can find more on the volume profile and footprint charts on the Atas YouTube channel as well. And I'm going to quickly remind you the key principles of it. But essentially, the whole webinar is going to be more for those who already know the basics and want to dive deeper into the same topic. I'm going to share my chart in 1 second. One moment. Doesn't let me share my screen for some reason. I do hope that you all can see my screen right now. Let me just quickly check it. If you can just quickly check it, I will just quickly check it on YouTube and we're gonna continue our webinar. Yeah, that works. Perfect. Amazing. Fantastic. I can see my chart also, and you should be able to see it as well. So first things first, let's talk about the key principle of the volume profile and footprint charts. And we're gonna continue with the 3 different setups that you can utilize to make your trading better as well. Now, if we are talking about the volume profile, right? The volume profile for me personally is the most important indicator on the market activity. None of my analysis of the charts is ever done without volume profile because it allows us to see exactly what is happening. Where is a bigger amount of volume executed? Where are the market participants entering and exiting trades without simply guessing it, right? Because without volume profile, we can guess where the market participants are entering the trade, but using the volume profile or TPO or the combination of both can allow you to see the levels and zones in the market, which are interesting for traders all around the world, and you can predict the reversals from those zones as well. A footprint, on the other hand, and I'm going to show you, I especially simplified my indicators and everything to make it easier for today's webinar. But essentially, the footprint is like the X-ray for the market. It's a detailed distribution of asks and bids and the total volume within each and every candle. So if volume profile is a macro perspective to determine the most important valuable zones and levels in the market, then footprint allows us to detailedly examine the market activity to see how the market participants behave when the price returns to those key zones. So my overall analysis, before we're going to dive into the 3 setups, which we're going to talk about today, starts always with an overview of the volume profile and the key levels and the key zones that I can see. Now on ATAS, you have different ways, different indicators that allow you to represent the volume profile visually in multiple different ways. The indicator that you can see on my chart for today's specific webinar is called the market profile and TPO. Normally, I have 3 of those on my chart for 3 different time frames, time periods. One is always for the daily. Allow me to open my settings. One is always for the daily, and this is the one that you can see on my chart now. And another 2 are for the weekly and the monthly time frames. Now, for the weekly and monthly time frames, I can switch on or switch off the profile, but I always have my key zones on my chart, which is the point of control and value areas. Now, for the daily period of time, I also have my volume profile, the histogram, turned on. And for my personal comfort, I also have the filters implemented, which allow me to see and filter out the highest volume accumulation areas. As you can see, each of the profile that is built on my chart has a specific part that I highlighted in red color. Now, this red color is a filter that shows me the minimum of 2,500 contracts traded on each and every single level. This allows me to filter out an actual important high volume nodes. If we are talking about the high volume nodes in general, and I want to repeat it again because we're going to use the term high volume node on today's webinar. It's a couple of setups. The high volume node can be determined by the area where the histogram increases. So every area where the histogram becomes bigger on the right side, extends to the right side, can be called as a high volume node. But not each high volume node actually carries a significant amount of volume because it's all in comparison. So to ensure that I actually can see the high volume nodes which carry more than 2,500 contracts per each level, and those are the settings for their 6E Euro futures contract, right? I ensure to enable the filter to visually easily see it. Because trading is difficult enough, and using the filters and on others make it easier for you to visually see immediately what's important for your analysis. So I invite you to also implement the filters. It's going to be different numbers for different types of assets, because obviously if you trade S&P 500, 2,500 contracts is going to be nothing. So you will need to increase the amount. If you trade less volatile, less liquid assets, you're going to need to decrease amounts. So this is the thing that is changing throughout assets. But once you found the level of the filter, it can actually help you a lot in your analysis. Now we're talking about the footprint charts, right? I have my visualization set for today's webinar on bid ask, delta colored. So each and every single candle and cluster is colored by the delta color. And as a help for today's session also, and for today's 3 setups, we are not only going to be using footprint itself, but also the cluster statistic. Cluster statistic is also the indicator, and not as perhaps some of you are familiar with it, some of you not, but it allows you to see the statistics for each footprint candle. So if you're gonna go in settings, you can find the indicator cluster statistics going into the indicators by either clicking Ctrl+I or by clicking the indicator window on top right here. And you can find the cluster statistic here, and it's going to allow you to choose what you actually want to see, which type of statistics you want to see. It allows you to see different kind of way, and for different kind of setups, you can apply different statistics. For the purpose of today's webinar and the setups that we're going to be using and learning, I'm going to be using delta. So the delta row is going to be showing me the total delta and in each and every single footprint candle. Volume is going to be showing me the total amount of asks and bid in every single footprint. And trades count is going to be showing me the market activity, whether it's the amount of trades increases or decreases when price reaches certain zones and levels. And it shows the total amount of trades executed throughout the whole market in each and every single footprint. So it's quite useful. I do love using also the maximum minimum delta as well for different setups. Of perhaps we're going to be covering it also in the next webinars together. For today's purpose, we're going to use in volume, trade count, and delta. And then other settings that I apply in my cluster statistics is also the proportion by the visible range. Give me one moment. I'm going to show you here. Proportion by visible part of the chart, it is enabled for me because then it compares the volume delta in trades based on the visual part of your chart, and it highlights for you something that stands out of the average. Because if you're gonna unclick that, it's gonna compare it to the total amount, the total chart, and it's not always accurate because it depends what you trade. But because London, Asian, New York session, it has different volatility. For me personally, I find it better to enable proportion by the visible range, because then I compare it and can select the important volume, delta, and trade count for this specific period of time that I'm looking at. So it's showing me something that I need to see and pay attention to right now. Not compared to New York, not compared to London session, but right now, this very moment. And then you can choose the colors, whatever you're comfortable with. I stick with this with a basic green and red for my footprint. But perhaps if it's too bright or too too controversial for you, you can choose different colors as well. Right? And it's gonna show like this. Now for my footprint chart also, if you're gonna go to the settings, into the cluster settings, footprint settings, so not this, you can also choose the colors. And the most important things that we need to select is the proportion settings, where you also can select either by whole chart or the visible region. We're also going to be using the visible region, and we're going to set our upper cutoff at 10%. So it's also going to be selecting for me the bright deltas, negative or positive deltas that I actually do need to pay attention. Okay, so those are the settings for today's webinar that we're going to be using. And well, let's dive into our principles of using a combination of volume profile and footprint together and the 3 different setups. Now, by the way, in the end of today's webinar, I'm going to leave the time for questions and answers. So there will be any questions. I would say that it's better if you keep it till the end of the webinar, because then I will be able to open the chart and actually see your questions also and answer them as much as I can, also to help you with your own trading. Right? So we're going to start with a setup that is called the momentum breakout setup. And the logic of the setup that is called the momentum breakout, that it focuses on the impulsive breakout of the key levels, accompanied by the sharp increase in volume and aggressive trades in the direction of the breakout. Okay? And we're going to use just this week as well as an example. It happened just yesterday. So it's a perfect example because you can actually see how you would able to take the trade just yesterday and make some profits on it based on this specific setup. Now, we are looking at our 6E 15-minute time frame, Euro futures 15-minute. I use 15 or 30 minutes for the overall analysis. And as I said in the beginning, I always pay attention first to the volume profile. Now, if we are looking at the momentum breakout setup, we want to see the moment when the price breaks outside of the area which was repeatedly tested by the price before. And if you look at this chart, I'm going to highlight it, but it's clearly visible that the zone of the price around 0.54 0.55 right here until the zone 0.5430 was actively tested throughout the whole week. So we see that the price has difficulties breaking through those levels. And if we scroll to the left side, we will see that this specific zone was already quite interesting for the price earlier. So we see that it's repeatedly tested it. And what I was looking for just yesterday, I actually was taking this trade as well. I was looking for the moment when the price is going to break through that zone one more time. And when the price breaks through that zone, I want to see the candle with long bodies and little to no wicks in the breakout direction. So the better, the higher is the momentum, the bigger is the momentum of the breakout, the better it's going to be. So as we can see, after testing this zone for a while, just yesterday, the price managed to break to the upside. And I'm looking at this specific candle because that was the first candle that broke above the zone and closed with a very strong full body and almost no wick in the direction of the breakout. This candle alone is already showing us the strengths of buyers. But now we also want to confirm the strength of buyers by the volume profile and at the same time by our footprint chart. Now, let's have a look at once more time at this zone where the price found itself for quite a long period of time, for like a whole week until yesterday. I'm going to take my manual volume profile and place over this zone. One moment. I'm going to enable color. There we go. Right. We will see that right above it, like right at the top of this consolidation zone, we had the TPO point of control. But at the zone which was repeatedly tested, we see barely no volume. So if you look at the volume profile over this whole consolidation, we're going to see the high volume nodes in the middle of the consolidation. We're going to see the low volume node on top of the consolidation. So the zone of the low volume and the price repeatedly testing it is something that we want to see the price breaking out from. Okay, so the low volume zone repeatedly testing, the price breaks to the upside. Now, what I want to see at the moment of the breakout is how did the market participants behave when the price was shooting up from the zone that it had struggled to break before. So what I'm going to do is I'm going to shift to a footprint chart. And we're going to find the yesterday's zone, breakout zone. It was right here. This is a zone that we are talking about. 0.550. And what I want to see is how did the market participants behave at the moment of the breakout. So if you're going to zoom in, we will see three conditions of the confirmation of the strong breakout to know that it was actually the breakout, and we can start looking for the trade in the direction of the breakout, because the breakout itself is not enough. We all know, if you're an experienced trader, probably experienced it for a long time, like a couple of good times already, that the price can fakely break out and then return back into the area of consolidation. So this specific setup serves you as a confirmation that you can safely start looking for the trades in the breakout direction. So the first candle that breaks outside of 1.055 zone is this 5-minute candle at 4:30 p.m. Central European Time. And this candle characterized with a very strong volume. So as we can see, at this specific candle, we had 7,000, almost 7,500 contracts during the 5 minutes. Well, we can all agree that it is outstanding volume, because during this whole period of consolidation, you're not going to see such a big amount of volume traded. This volume only entered the market at the moment of the breakout, which is a confirmation for us that this high volume, or the traders who execute those trades, they support the breakout direction. At the same time, the confirmation number 2, we have the amount of trades increasing. So it's increasing the activity of market participants, which also confirms that traders actively enter the market, compared to the previous period of time when for hours the price had barely to no volume and barely to no amount of trades executed. We see that the biggest amount of trades from the London session until 4:30 was 1,300. And then at the moment of breakout, the something that needs to catch your eye is that the amount of trades increased suddenly to 4,000 trades in a matter of only 5 minutes. That's a big difference, right? Combine the amount of trades with the amount of volume and contracts executed, and we already have 2 strong confirmations as a breakout, and that we can start looking for trades in the direction of the breakout, which is in this case specifically is to the upside. Now, the third confirmation that I want to see is the green delta start appearing. In other words, I want to see the disbalance in the market shifting to the side of buyers. I want to see the bigger amount of asks than bids consistently in the market when the price breaks outside of the area that it struggled to break before. So what I see here is, once again, let's go back, and what we will see for the whole period of consolidation, we had barely transparent delta, which means that we didn't have almost any disbalance between asks and bids. It was approximately the same, more or less. Now, right before the breakout, we had a strong red delta. And after the breakout, we see that markets started to be hit by bright green deltas. So candle after candle, we see that delta shifted from barely transparent or red to bright green. Several candles in a row confirm us that buyers are supporting the direction, and we can start looking for buys, long trades also as a third confirmation. Now, once again, I'm going to repeat those 3 confirmations for the momentum breakout setup. First, at the moment of the breakout, you want to see the amount of volume increases. Second, at the moment of breakout, you want to see the amount of trades increasing. And third, at the moment of the breakout and after, you want to see their shift in delta. If you are looking for a buy and the breakout was to the upside, you want to see the delta being green. If the situation would be the opposite would accordingly apply also. If let's say the price would struggle to break the support and it would break out from the low volume node, from the support to the downside, you would want to see the higher volume, the higher amount of trades, but red delta. So your delta color is determined by the direction of the breakout, and it's determined by the direction of the trade you're looking for. So in this case, we see all three confirmations coming together. Once again, it was just yesterday. So how do you actually open the trade once you have all three confirmations? In this specific scenario, you had two different entry points that you could utilize. I always wait for the pullback to the bright green delta, the brightest green delta in the footprint. So in this whole move to the upside after the breakout, I can highlight two bright green deltas. Is this bright green delta, which would be my first entry point, conservative entry point, and the second bright green delta, which would be my riskier entry point. So we could have two entry points, one at the level of 0.5710 and one at the level, one at the level 0.5555. Beautiful level as well to enter the trade. And once we are here, while I'm waiting for the pullback, well, you can also enter by market, but that's going to be riskier. I wait for the pullback to, first of all, cut my size of the stop loss, because the bigger is the pullback, the smaller stop loss I will need. And secondly, because the bright green deltas are the specific levels where the biggest amount of asks, right, and trades in general were executed on the breakout direction at the moment of the breakout. So once the price returns to those levels, it's going to be probable that the traders who executed those trades are going to be protecting their level and not wanting the price to reverse against them. So the big market participants are likely to stand back and start again executing aggressive buys to protect those two levels from being broken. And what can we see? Once again, let me summarize it before we're going to see the result of it. We were looking for the price to break outside of this zone. We waited for the price to break above, close strongly above the zone of the breakout, strong body, full body of the candle, barely to no wick. And on the footprint, on this whole breakout move, we were waiting for increased volume, increased amount of trades, and bright green deltas in the direction of the breakout. If you would enter at two of these entries or one of those, depending on your preference, I would place my stop loss below the breakout candle. So the breakout candle is this candle, it's one that we talked about, the 7,500 volume one. So my stop loss would be below this candle for, let's say, 5 ticks, okay? So my stop loss goes below the breakout candle. And let's see the result. Up until today, we would have quite a good run here. From the more conservative entry would have approximately 156 ticks. And the other one was from the riskier entry, we would have 1,025 ticks on Euro futures up until today. And what can we see? Well, after the NFP, the price once again returned to the same zone we are talking about. And it's reversed once again from there, which is one more time confirms the strengths of the zone that we've discussed today. So it was the setup number one, the momentum breakout setup. And I have two other setups that we are going to be talking about today. So once again, if you have any questions left about the setup, I'm going to leave my charts open. We're going to return to this in the end of the webinar. I'm going to answer all your questions, help you with everything that you need to make your trading better, and to help you to use those setups for the profitable, finding the profitable situations in the market. Now, that was the setup number one. Setup number two that we're going to be discussing today is called when the reversal at the extremes. And for this specific setup, we also always going to start with a volume profile first. And the volume profile itself, now let me use my ERA futures once again. Now, the volume profile itself, as we talked about, consists from the high volume nodes. One of those is point of control, the biggest volume node. And it consists also from the low volume nodes. The low volume node, or the vacuum, as I call it right here, right? Those are the areas with very low volume, or the very low volume compared to the overall profile. And they usually act as a black hole in a space, or like a vacuum. So they get track the price. Now, if the vacuum is formed in the middle of the volume profile, it's going to be attracting the price to return to the zone, as we can see. If the low volume node is formed on the wick, this particular part of the volume profile is going to be called the wick tail. Let me find a couple of examples to show you. And I want to show you a couple of things that are not and are the wick tail, so you can clearly see the difference in the market. Let's increase the amount of days. One moment. There we go. When we say the wick tail is a situation when the price highs or the lows were supported by the very low volume and the volume profile. Like, for example, the situation here. As we can see, when the price reached this high, it was barely no volume at the highs of the price. So compared to the overall volume profile, this was the weak price tail. And if the wick tail is formed on the top of the volume profile, it's called the selling tail. Okay, the selling tail. I'm going to type it right here. Selling tail. Now, if the same situation would happen on the bottom, we would call it the buying tail, because the wick tail in that specific situation would be the buying one. Now let's find it. Now here we have another selling tail, as we can see. So once again, the price reached the highs right here, but it was supported by almost no volume. So when the price reached it, it declined rapidly, although there was almost no volume left at the highs. So once again, this is another example of also the selling tail. And I want to find the buying tail. Oops. By the way, not all wicks, okay, are the selling or the buying tails. And this is what I wanted to show you, that when the price goes down, even if it has a very long wick and a very weak candle, like a shooting star, for example, it doesn't mean that it is a buying tail. Because in this specific scenario, as we can see, the price reached the low, it created the wick, it was a shooting star, but it wasn't the buying tail. Why? Because the volume profile, we see that at the moment of reaching the low, the price was actually pushed up by the quite high volume node. Because we see the volume profile increased at the moment of the price creating the low. So this example is not the buying tail. Although without volume profile, it could have, be seen as one. And this is exactly why I do use volume profile. And some people say, why do you need to use volume profile? Because you can see it on the chart. Well, not everything you can see on the chart, because volume profile actually shows you the differences between the situations, for example. So this is not the buying tail. This is also not really a buying tail, because we see the volume decreased, but it still was quite a volume on the bottom. Now, I want to show you the buying tail also to clearly show you the difference. So here we go. Right here, as we can see, the whole volume was accumulated above, and then when the price created the low, it was barely no volume, although the wick was significant, right? So we see that the price reached this low, created the new low, but it was barely no volume. And this, for a difference to the previous example, is called the buying tail. So this is actually the buying tail. Now, why I'm explaining buying tails and selling tails is because we're going to need them for the next setup that we're going to discuss, right? The setup that is called the reversal at the extremes, or delta reversal, however you want to call it, doesn't make any difference, right? This setup is based on analyzing how major market participants react at the extreme price levels. And reversal often happens when aggressive buying or selling exhausts without further price movement. And this is why buying tail and selling tail are important for the setup, because the movement to the downside in this example was quite aggressive, but at the same time, the sellers exhausted themselves and there was no continuation of the downwards movement. So by using buying tails and selling tails and examining the footprint when this happens, we can also find a very profitable setups. Now, the conditions for this setup is first, as you already know, the low volume node, another called the buying tail or the selling tail, or it's also called the excess, right? It's the same, excess. They confirm the reversal. And now then we go into the footprint to evaluate a delta at the local highs or lows. Lows being the buying tails, highs being the selling tails. So we want to see on the footprint the dominance, buyers or sellers. For example, right, the large selling, for aggressive selling, negative delta at the lows that diminishes without any further downwards continuation of the move can signal a potential upwards reversal, and vice versa. Let's find our selling tail before we go into the footprint. There we go. At the selling tail, what we want to see the bright buying deltas. We want to see the bright green deltas, because that's going to be a sign of aggressive buyers pushing the price up. And the selling tail is going to be the confirmation that they exhausted themselves, they bought out, and they couldn't continue the move higher. So the buying deltas, green bright deltas on top of the selling tails, are going to be our confirmation of the downwards reversal. And on the other hand, the bright red deltas on the buying tails are going to be the confirmation, right? Bright red deltas, selling deltas, negative deltas, and buying tails are going to be the confirmation for us for the upwards reversal. So let's find those two confirmations. Let's do moments on the footprint, and we're gonna see the footprint delta and see if one of those was our setups. This is the 5th of July. There we go. Let's have a look at our selling tail. Now, this is the selling tail that we talked about. Let me highlight it also on the 5-minute time frame. There we go. So we have the buying tail created. And once you see the buying tail, what I want to see is I want to examine the deltas inside of the tail. So if I go here, the first things that I'm going to see my cluster statistic showing me the very big disbalance into the negative side. So at the same candle, when the price was dropping and create the buying tail, I see the very negative delta created. So in this specific candle, we had 1,200 more bids and asks. At the same time, the confirmation number 2, we had the increased volume at this specific candle, not the tail necessarily, but the candle itself, and the amount of trades. Besides this, what else I can see is that in this specific candle, there was a disbalance into the negative deltas. So majority of the footprint is red. You can see the red on top. You can also see the red levels on the bottom. Here, here, which also confirmation for us that sellers exhausted themselves. Because if the price would close as a strong body on the like full body candle without no wicks on the bottom, and it would be the negative footprint, it would be the confirmation of strength of sellers. But because the candle looks like this, and despite having a very negative delta, the huge disbalance on the bid side, the price still created the long wick and buying tail. This is for us a confirmation that we can start looking for the trades to the upside and we can start expecting the bullish reversal. How to enter the trade? As just in the previous example, I like to wait until the price comes back to my bright deltas, because those are usually the levels that big market participants are going to start protecting. So one of the scenarios would be if I would take an entry right here on this specific candle when the price returns to this bright red delta. And as you can see, 10 minutes in a row, the price was confirming my entry. Now, the second scenario would be more conservative if I would wait for the price to return closer to the bottom of the buying tail. So I would wait for the price to return here. This would be our more risky trade. This would be our more conservative trade. So some time passes, and as we can see, the more conservative entry wouldn't happen, but the price returned towards our level 0.8525, which was our bright red delta. If we would enter the trade right here, just until the end of the day even, we would already be as maximum as 52 ticks up on 6E futures. Now, in this specific case, also, my stop loss always goes below the buying tail or below the lowest bright delta. So it would go below 0.8355. Logic behind it is exactly similar, because I want and I expect one of these two levels to hold the price. So either 0.8525 or 83.55, I want to hold the price. If the price would break through this, then my setup would be invalid. And hence why I place my stop loss below the lowest of the brightest deltas. Okay, until the next day, let's see what could we get. What could we get from this trade? One moment, shift it for me. Yeah, well, the maximum we would get from this specific trade would be approximately 57 ticks on 6E. So this is a buying tail. Now let's have a look at the example of the selling tail that we found also. So I'm going to scroll back. We're going to find our selling tail that we talked about. And we're going to also examine the footprint on the selling tail. Here we go. So once again, first things first, I wait for the selling tail to be created. And once it was created, and I confirmed that it was a long week with barely no volume, I'm going to go into my footprint to see the deltas inside of the selling tail. So that was their 6th of September. Let's shift towards September. There we go. So this is our selling tail. Let's also show it on the 5-minute time frame. And once again, what I want to see is how did the price react? How did the buyers, sellers react in this specific zone? And preferably, what I want to see on the selling tails, I want to see the exhaustion of buyers. So the opposite to what we just looked at. I want to actually see the bright green deltas. I want to see the disbalance on the buyer's side as my confirmation for the entry. So if I'm going to scroll, come closer, we will see that although the delta was negative, I can clearly see my green bright deltas on top of the selling tail, right? You see that it is the brightest deltas in this whole candles as a selling tail and also as a continuation. The brightest deltas were right here, and I'm going to highlight those. This is from the level 11,405 to 11,370. So this is my zone that I'm expecting the price to, for the market participants to protect. If the price comes back here, I'm expecting this zone to hold the price. There's bright two green deltas. And as a second confirmation, we see that the amount of trades drastically increased compared to the previous period of time when we had barely no trades. And suddenly in one candle, when the price shot to the upside, it was 8,800 trades in a matter of 5 minutes, and 4,400 followed to the next candle. And we also had the 17,500 contracts traded in a matter of 5 minutes, and 9,000 contracts followed in the next 5 minutes as well. The increased volume, the increased amount of trades, and the bright green deltas inside of the selling tail are my three confirmations on the footprint that I can start looking for the entry to the downside, because most likely the price is going to reverse. So I would prefer to see the price coming back to the zone. And I didn't prepare it, guys, for you. I wanted to show you examples on the real chart. And as you can see, the price perfectly comes back to our green bright delta levels. And this would be our entry. And if this would be our entry, I would place my stop loss once again behind the selling tail. And so the stop loss in this case, let us extend it a little bit, the chart. There we go. The stop loss in this case would be, let's say you enter on the bottom green one. Your stop loss would be approximately 45 ticks. And your take profit here, it's a very conservative stop loss. Your take profit would be at least 127 until the previous lows, or continuing, right? If you're going to scroll further, we will see that the price went for total over 200, if I'm not mistaken, ticks to the downside if you would be willing to hold it and let it run. Yeah, 240 ticks and probably counting if we would scroll lower. And this is just from the second setup. So this is setup number 2. I'm going to quickly summarize the points just for you to remember, the conditions for the setup. First of all, on the 30-minute time frame, using the volume profile, I'm looking for the long wick to the upside or long wick to the downside with barely no volume. Those are called the wick tails. If the wick is to the upside and it creates a high, it's called the selling tail. If the wick is to the downside and it is barely no volume and it creates a low, it's called the buying tail, like this. And once I see the selling or buying tail, I'll go on my footprint chart, and inside of the footprint, I confirm the increased amount of volume, the increased amount of trades in the tail, and the exhaustion of buyers if it is a selling tail, or exhaustion of sellers if it is a buying tail. Okay, so using those confirmations on the footprint allows you to enter the trades like this. And my stop loss, I place behind the tail. So either below the buying tail or above the selling tail. Once again, if you have any questions in the end of the webinar, I'm going to leave some time, 10 minutes or something to answer those questions of yours. But we're going to close off with the third setup of today. And the third setup of today is going to be for the trend continuation. Because for now, we were talking about the reversals. Now, what if the market is trending? For the trending market, like for example, right now, cryptocurrencies, but also stocks, also indices, right? Also indices futures, also for currencies. We are looking for the trend continuation kind of setups. And this one is going to be extremely useful for December and January as well. So in other words, this setup is going to be called the volume imbalance. And this last third setup of today is focused on trend continuation supported by the significant high volume nodes. High volume nodes, as we talked about it in the beginning, often act also like a very strong wall of orders where large players accumulate their positions but also protect their positions. So if you look at our 6E chart, for example, the high volume nodes are usually the areas which the price reverses from after a while. So high volume nodes are either inside of the consolidation, so the whole consolidation is one big high volume node, or it acts like a wall and the price actually reverses it. So conditions for the third and last trend continuation setup of today are the following. We need to identify the high volume node, and we need to wait for the price to break away from the high volume node, and the high volume node needs to be below for the buy trades or above for the sell trades. Let's find some examples so I can show you what I'm talking about. For example, right here, where we had the selling tail, essentially we can look for other more examples in the end if you want. So what we see here is the price reversed and it started to go up, and we see the several high volume nodes created by the price. The first high volume node is right here. The second high volume node is right here. And then the price reverses. So we have at least two, even three, for let's take two high volume nodes on this move to the upside. How else can you confirm it? If it is not clear, I love using the manual placement volume profile. It is right here on Atas on the left side of your drawing tools called Market Profile and TPO. I absolutely love using it, especially if the market is trading. It's one of my favorite setups. I place my market profile and TPO from the beginning of the move to the upside till the end of the move to the upside, and it's always going to clearly show me the high volume nodes, which in this case is clearly right here, the high volume node together with point of control number 7. Right, so let's use this as an example. So I always confirm my high volume nodes using the TPO and market profile manual placement. And Atas, I absolutely love it, and it helps a lot in the trend continuation setups. Now, again, let's go through confirmations. Right, let's go through our confirmations. What I want to see is I want to see the high volume node in the direction of the trend. So the price was going up, and then it was accumulating here, the high volume node. We can see it on our volume profile. Once I see the high volume node, I'm waiting for the price to break outside of this high volume node. Because high volume nodes are usually signal accumulation of volume, and I do not want to enter the trade when the price is still accumulating. The volume is still accumulated. I want to wait until the price is outside of the high volume node. In other words, I wait for this move. If the price is moving up, I want to see the price locating above the high volume node. If I would be looking for the downwards movement, like for example, if we would take this move to the downside, and this is a high volume node, I would wait until the price is below. So let's say here, then it was accumulation, and I want to see the price being here below this high volume node, this high volume node. So I want to see the price being right here. When the price is going down, again, I'm going to repeat it once again to make it clear. I want the price to be located below the high volume node. If the price is going up, I want to see the price being above this high volume node. Once the price is above the high volume node, I'm going to be waiting for the pullback to the high volume node. As I mentioned before, the high volume node usually acts like a wall for the price. For the price reverses to high volume node, my expectation is that it's going to react on this high volume node, and the high volume node is going to protect the price. So it's essentially my reversal point, correction point. So my entry, right, my main entry is going to be, I'm thinking about how to show it to you. Let's say here, right? It's going to be here. When the price comes back to the high volume node in this area, I'm going to be looking for a buy. If we are in the downtrend, when the price comes back to the high volume node, I'm going to be looking for a sell in this area. Now, I'm not going to be blindly opening sells or buys. What I want to see instead, I want to find confirmations on the footprint. So once you're confirmed, high volume node, the price is away from high volume node. The price is above high volume node for a buy. All the prices below high volume node for a sell. We go into the footprint to examine deltas and the market behavior when the price comes back to the high volume node. So let's go into the footprint. We are still here, so that's perfect. Just gonna do this. There we go. One moment, sorry for the quick technical break. There we go. So our high volume node on the 5-minute time frame is right here. And we are examining the footprint when the price returns to the high volume node, which means in this area. So if we get closer, what do we want to see from their footprint? For the footprint side, I want to see their increase of the market activity when the price comes back to the high volume node, and decrease in amount of trades and volume when the price reverses from the high volume node. Why? Because if I would see the continuation of the big volume and the big amount of trades hitting the market, it would be the confirmation for me, or the thought, it would give me the food for thought that the market participants are trying to break this level. So in fact, in this specific scenario, I want the market participants to show low volume and the decreasing amount of trades. So when the price comes back to the zone, let's examine what we see. We see first the very high amount of volume and trades, and it decreases as the price reverses from the zone. So the price was sent down with a very big amount of volume in trades, but reversal happens calmly, without higher activity, without high volume, without high amount of trades that could potentially break the zone. And this is exactly what I want. I want to see the decrease in amount of volume, decrease in amount of trades. And I want to start seeing the bright positive deltas happening in the market. And what I see is that already when the price reached this zone, the deltas were positive. The next candle, bullish candle after the red delta, I see once again bright positive. And I see several levels with a high positive delta here and right here, which also playing the role for me as a confirmation that I can start looking for a buy. And I can either enter the buy here already at this bright green delta or this bright green delta. Both are going to be good, right? And this is going to be my entry for a buy, because once again, I saw the high volume node. I waited for reversal to the high volume node. I see the decrease in amount of volume, decrease in amount of trades, and green deltas over leveraging the red deltas, which means that we have a higher amount of asks, buyers supporting the uptrend. Now let's have a look at another scenario which we also found here, which is for the selling setup. So once again, we see the high volume node, and we see the price returning to the high volume node after some time. So when the price returns to the high volume node, I want to go to the footprint and examine asks and bids and the market participants' behavior in this specific zone to make a conclusion. Do I want to enter the trade or do I not want to enter the trade? So footprint for me always plays a role of the extra confirmation, which makes my trades more confident, my entries better, and instead of guessing if the price is going to reverse or not, I'm going to immediately see the market reaction, and this increases your potential win rate as well. So what can we see? We see the price reached their zone, and we see the decrease in volume. Check. Because once again, we don't want volume to continue to increase at the zone, because I want to ensure that the price is not going to try breaking it again. So I'm going to stick with the decrease in volume. I want to see the decrease in volume. And this is exactly what happens. Decrease in amount of trades. Once again, also is an extra confirmation, because again, I do not want to see traders trying to break the zone. I want to see the price rejecting it. So once again, the decrease in amount of trades also confirms the intention of the market participants to let the price reject from the zone. The only things that I'm waiting for the deltas to shift to the right side, because I want to see the market, like the market participants, the sellers starting to win the market. So right now I see green, so it's not interesting for me. I'm going to stay away from the market. And then as I can see, their shift happens and the disbalance goes from more green deltas to more red footprints. More green footprints, more red footprints. The first level that I see and that I can use for entry is this bright red delta. So I could already enter the market after this bright red delta was created. Or wait a little more and I see more red deltas being created. I see this one, for example, which also can be used for a sell. So both of those entries, here's my arrow, just a second. Both of those entries, let's say, let's take the opposite one. Let's say here and here would be good enough, because as you can see, they both will create, like in this case, in both cases, we would enter the trade after the bright red deltas, which would be the extra confirmation of the intention of sellers to move the price lower. So once again, the high volume node, price going away from high volume node, price coming back to the high volume node. And then on the other hand, on the footprint, we want to see the decrease in volume, decrease in amount of trades, and bright green deltas if we are looking for a buy, or bright red deltas if we are looking for a sell. Okay, so those were our 3 setups, 2 for the market reversal, 1 for the trend continuation. And I appreciate every single one of you who stayed till the end of the explanation. Now, what we are going to do is I'm going to leave some time for questions and answers. I'm going to go through the chat. I'm going to see if you already had some questions asked in the chat. So it is your chance to think about maybe perhaps some questions that you have still left. Type them in the chat, and I'm going to be very happy to help you and discuss better the examples that we've covered today, or the setups that we covered today. Or perhaps you have any other questions about the footprints, volume profiles. I'm going to be very happy to answer those. So let me go through the chat. You can always see the webinars later because they're recorded. They stay. You can rewatch it as many times as you want. You can repeat them. You can save this information for yourself. So it always stays there in your reach. Okay. Is there an effective way to trade unusual volumes or know their exact exhaustion and trade that to bearish reversal? Ivan is asking. So I always use footprint as a confirmation, because only the volume can give you the information about where the price can react and reverse on the high volume nodes, or the low volume nodes acting like a magnet at the price coming back to those. But footprint is something that helps me personally to read the behavior of market participants. So one of the setups today we discussed, of course, the exhaustion, which is the selling tail and the buying tail. So I hope that was the answer to your question. Even if you still have some questions about this specific setup, please do let me know. But essentially, I always use a combination of volume and footprint, because then the footprint confirms the exhaustion. Because if in a buying tail you see the buyers and then the price reverses to the downside, this is essentially your sign that buyers exhausted themselves. Otherwise, the price will continue up. I see you sent another message. 1 second. Yeah, of course. The same setups, by the way, can be used in any time frame, and the combination of, for example, seconds footprint. It doesn't necessarily need to be 30-minute and 5-minute chart, because for me personally, I'm an intraday/swing trader, and I use 30-minute to paint the full picture. I use 5-minute to find the precise entries and exits. But you can also do like Ivan says, and you can use, for example, 15-minute or 5-minute chart for finding the buying tails, selling tails, the high volume nodes, and the reaction. And then you can use a footprint on range XV charts, which Atas offers, by the way. I absolutely love those. Or the seconds, 5, 10, 15 seconds, if you're a scalper, to find the confirmations in deltas and the disbalances of asks and bids. It's going to perfectly work as well. The difference is only going to be in there what you can expect, because obviously the lower the time frame, the lower should be your expectations about their move duration. So you cannot expect then on, for example, if you're talking about 6E contract, you can't expect then the move for 200 ticks happening, right? Then your take profits are going to be smaller, but your also stop loss are going to be smaller. So it's about expectations. If you build those right, all three setups are going to work on different time frames as well, because the logic behind stays exactly the same. Okay. The time frame we answered. So I work personally with 30-minute time frame and 5-minute time frame. It works for me, but as an intraday/swing trader, I think it's something personal that you need to check for yourself, visiting the time frames, because it's based on the trader's personality. For some of you, it's going to be working the same as me. For some of you, it's going to work differently. Same setups, you can adjust to different time frames, to different assets as well. All those volume profiles on the chart, they are from the instrument on Atas, which is called the market profile. And I have 3 of those: daily period, weekly period, and monthly period. And for the purpose of today's 3 setups, I use the daily period. And I'm going to repeat it. I said it in the beginning of the webinar, but I'm going to repeat it. The levels that are selected and highlighted in red are the levels that have filtered for 2,500 or more contracts in each level. So you can select different filters, and for different assets, you will have different filters. But indeed, I do not draw them manually, because Atas has a market profile and TPO which draws it for you, which is very useful. Try it out. For those of you who are asking about the mark also on Atas, Atas are going to help you. But as you can see, I'm using the mark actually. I'm using mark right now, and I'm running my Atas through Parallels. So the only things that you need to do is you need to download the Parallels and install the Windows on it, and it perfectly works. I've been trading like this for the past 4.5 years, and it works. It doesn't fall off. So even if you're a Mac user like me, and I would never go back to Windows, but I love my Atas. You install it one time, it always works for you. No hustle, no struggle needed. Okay. Thank you for the great infos. Would you please share your template of settings? Yes, indeed. I can share my template for this specific 3 setups in my Telegram for the downloading it. The Telegram link is in the description of today's webinar. And after the webinar, I'm going to send the files with the templates so you can download them for yourself, both for footprint and for the market profile and TPO. So you can subscribe to the Telegram channel, and after the webinar, you're going to find the links to download it in there. Second time attending your webinar. It's interesting, very informative. Can't wait. Can't thank you enough. Thank you so much. I really appreciate it. I'm really happy that you find it useful. I love what indicators. Indicator is a market profile and TPO, and then the footprint. There is nothing else there. The best way to know either the delta is the short, the red delta is a short trade being opened or the buy trade being closed, is looking what the price does afterwards. It's very simple. You just need to not rush, and you just need to wait until, just need to let it run. If the red delta is in the middle of the trend and the price continues to go down, those are the aggressive short trades that are being executed. So those are the sell trades, the short trades that are actually being opened. On the other hand, if the red bright delta, right, is somewhere, for example, on the top, and then the price starts reversing, or it is in the direction of the upwards movement, you see the short bright red deltas. Those are potentially and with a high probability their trades being closed. So those are take profits of buyers. But at the same hand, it also can be the retail sellers selling, right? Those who are losing the money. But majority of the time, if the price is moving up and you see the bright red deltas, negative deltas, those are their closed positions. And if you see the price moving down and you see the bright red deltas appearing as the price going down, those are majority of the times aggressive short trades being opened. Footprint levels are valid for 3 days. For me personally, on the time frame that I trade, this is a great question. If the combination of 30 and 5-minute time frame, my footprint levels are valid for 3 days. Of course, if you're going to change and you're going to trade footprint in seconds, then your period of validity is going to be much less. No, the volume profile as we discussed today, I trade from the high volume nodes, not necessarily the point of control and the value areas. You can rewatch the webinar, it's discussed there. If a candle breaks the high volume node, I wait for the 30-minute candle closure. So again, if you use it in the same setup as I discussed today with the same time frames, I wait for the 30-minute candle closure. Once it closes, either it's a selling tail, buying tail, or the breakout from the high volume node. Then when the 30-minute candle closes, I go on the footprint chart and I see what was happening in the footprint. I determine the levels which are going to be my entries. And when the price comes back, like I enter the trades on those green deltas or bright red deltas, depending on the direction. And at the same time, checking the volume and the trade counts as we discussed on today's webinar. Oops. That's my light. Okay, guys, I'm going to be a little darker for a second. How would you use the volume profile of footprint to trade options on SPY? I do not trade options. So for options, those are completely different strategies. So I would more explore for traders who do trade options specifically, because those are the setups for their futures still. So that's different setups. Thank you, Patrick. Telegram URL is in the description. Which mark trading setup do you use? Because I have a lot of problems with others and parallels. I have MacBook Pro and it perfectly works. So I'm not a tech person at all. I simply installed the parallels, installed Windows on it. The only thing is that I have the Pro version. I also have the Air, and Air also works. The only thing is that you just need to run parallels and Windows, nothing else when you are trading on the Air one. Pro one has absolutely no issues. If you have any issues, try completely uninstalling it, both Parallels, Windows, and Atos, and installing it again. But just don't forget to save your templates for Atos before you do, so you don't spend a lot of time getting it all back. Absolutely. Point of control has the same function than high volume node. Point of control is the highest volume node. Okay, so we are talking about, for example, the same setup as here, and I'm going to turn off my market profile just for you to have it clearly. So my point of control is a bold black line. It is the highest volume node. This is also the high volume node. This is also the high volume node. Point of control is the highest volume node. So yes, you can also determine high volume node by the point of control, but not only. High volume node can be also the one that does not contain the point of control in it. Exactly. So I don't see any more questions. Once again, you will be able to download the setups and templates for this specific 3 setups in my Telegram channel. You're gonna just download it for free. You can install it, use it on your own Atos. Last question I see from NAP. Do you have any thoughts on what was the site would indicate large market participants and absorptions on S&P 500? I wouldn't count for less than 5,000. So I'd go for 5,000 or more on S&P 500. And I hope that helps for you. Yeah, I see now. So 5,000 or more, I would go for S&P 500 futures. Okay, thank you so much for today's webinar. I'm very happy that you all had a lot of value. And I hope to see you on the next ones. You're gonna find, templates again and download it in Telegram. I also do post market analysis there from time to time, so you're welcome to join. And thank you so much for watching the webinar today. I do hope that you guys had a lot of volume, and I wish you a lot of profits with all 3 setups that we discussed. I see you on the next ones.
Okay, Anastasia, thank you very much for the highly informative webinar. It was pumped up with valuable information. Also, thank you guys for joining us today. Please don't forget to subscribe to be able to join us next time. And give thumbs up if you like our webinars. We will see you next time at our Atos channel. Bye-bye.